Good morning, gang. Good morning. Welcome to this fine Tuesday morning and this week's altcoin update. First and foremost, big shout out to Prime XBT for sponsoring today's stream. If you don't know who Prime are, we've covered this a few times, but obviously on Prime you can trade not only crypto, but you can trade Forex, commodities and stocks. And the beauty of it all is you can use USDT or Bitcoin as collateral. If you want to find out a little bit more about them, use the links down in the description. And if you do use the links down in the description, then make sure to use our codes where you can get up to a $7,000 deposit bonus. And if you use our second code as well, then you can get 25% off trading fees. So win-win. But thanks once again for sponsoring today's stream, Prime. As usual, everything we discuss today is not financial advice. I'm not a financial advisor. This is just for educational purposes only, and it's my view of the markets. Now, today, we're going to take a look at a couple of majors. So we're going to look at ETH, and we're going to look at Litecoin. I would start, as usual, by doing a recap on last week, but being honest, nothing really has changed. Obviously, we were looking at last week. Let's just get this up here, and we were saying acceptance back into the value area, then we could be looking for a push up towards the point of control / EQ. And we're still hovering in the same place. So I believe last week we were just here. So nothing really is moved much. We're still effectively range bound in this tight range. Same with Solana. Again, we're just going sideways. Nothing has changed. So my areas still remain the same, to the upside. If it does manage to get a good short squeeze, then I'll be targeting up towards these range highs. And if we continue to break down, then unfortunately back into this range here. But yeah, ETH, highly requested. So obviously, ETH's a great coin to look at when looking at effectively the overall health of the altcoin market. Now, obviously, it doesn't represent everything, but it gives us a good general overview of strength. Obviously, if ETH's doing well, then typically speaking, all altcoins do well. There are outliers, just like any market. Some altcoins will pump without anything else moving. Some altcoins will dump without anything else moving. But as a general rule of thumb, I like to keep an eye on ETH because it does give us a bit of a bias. So it's a funny one, is ETH, because from an Elliott wave perspective, you could argue that the low is in. A very simple ABC correction. Just make this a little bit bigger so you guys can see this on your screen. It's got the cycle just for fun. And the reason why we can say that is because it's actually printed a perfect one-to-one extension. So we could argue, is it just straightforward? This is ABC. This is now the low, the dominant low, and now we're looking to impulse out of here. An alternative way of looking at it is, could we say that if we just move these out of the way, that first move down was the A, and then we're looking for a B, and then we're looking for a C. There's many ways to look at it, and this is why it's not the time yet until we see the rest of the market start to turn around in terms of trend, especially Bitcoin, to start saying, yep, low's definitely in, and that's it, it's up only. Was this a good spot to buy? Yeah, it was a good spot to buy. I personally bought some down here. But I still have an invalidation, because if price takes out this low, then this can no longer be the end of the correction, and I'll be looking for lower. It's as simple as that. So I did buy spot down here, and I'm quite happy to exit that bag if price does take out this low, because it's very simple. It's a very clean invalidation. So let's take a look. Let's first chuck it out onto log so we can see this a little bit better. Right, so as usual, we'll start off. Now, because we've obviously got a lot more history with ETH, typically speaking, I would start off the streams doing this. And we see where all the volume is, and it's quite clear to see that the volume basically stands around between 2017 and effectively 2020 before the overall breakout. Okay, so it's quite easy to see where all the volume's at. Now, obviously, I'm using Bitstamp right now. Each exchange will be slightly different, but this is effectively what I'm looking at. So we can make this a little bit cleaner, and we'll zoom this in to this range itself. Let's look at this. Yeah, there we go. So we've got a range. It's pretty obvious range. So we take, in fact, let's go into the daily. Pretty obvious range is this. Range. Range. In fact, let's go back to the weekly because I've got a better high on that. There. And let's just extend these lines both directions. So obviously this is the 2017 to 2020 range, and as we can see, price came down, deviation into it, back out, and then now we're playing around with this line, and we're quite close. So if we take out our log, and we can see that we're still within this range. So initial thoughts looking at this, quite simply, change structure to the upside. Now bear in mind we're looking on a weekly time frame here. Get back above this level and start moving up. Take out these highs convincingly and not as a swing failure pattern back down. Then we could be starting to look at a new uptrend. And what do we want to see for a new uptrend? Well, it's quite simply what we want to see off the lows is we want to see a 5-wave structure to the upside. Obviously anyone that understands Elliott Wave will know what I'm talking about here. Anyone that doesn't understand Elliott Wave, then check out our website, links down in the description, and come and learn Elliott Wave with us. Because Elliott Wave's a key factor in spotting tops and spotting bottoms, or signs for bottom, shall we say. If we fail to break out of this, and from here we just start to roll over, quite simply, we'll throw it back on log scale again, and ultimately, I'll be looking back down to testing around this EQ, which also lines up with this value area high. Yeah, very straightforward. No reaction around this level, and bear in mind this is a zone. Obviously, I'm not saying this is an exact level because I'm not here to talk bullshit at you guys and say yeah it's a level. Then effectively I'd be looking at that as a zone. So what would I want to see down here if price came down here? Obviously it's a big if, because you know we could do something quite simple. Obviously you're thinking right now that Spitty, you're just an Uber bear. I'm not at all. But the other alternative is we take out these lows, little swing failure pattern, and then we just continue trading the range. Okay, so that's an important level right there. Take out that low and continue to drop, then ultimately I'm looking down to play this range. Take out that low as a swing failure pattern and reclaim back up, then we're just still in this range here. But obviously we're looking at a macro here. So if price does come down, I'll be looking at this value area high initially. And then quite simply, if you do get a reaction here, and you get a change of structure, then I'll be looking for longs. You don't get a reaction here, and price ultimately continues coming down, then I'll be looking at the point of control. And again, if bugger all reaction here, then I'm looking back down at the range lows. You lose those range lows, and yeah, it's going to start looking a bit scary. But that's obviously on a macro picture. As we've just said then, this could quite simply be an A, then we're looking for a B. Could this be the B, or could we push a little bit higher? And then we could be coming down for a C. We don't know. We don't know until it happens, and that's the beauty of trading. We don't know what's going to happen. We just got to look at the levels where we're most likely going to get a reaction. Okay? People want certainty in this market and any trading environment, especially when you're new to trading. You want certainty. You want to know that this is definitely 100% the low. But I'm sorry to say, but nobody can tell you that. Nobody can tell you that. The best trader in the world cannot tell you if that is definitely the low. Just like nobody could tell you if that was definitely going to be the high. Because there's no certainties in trading. We're just playing probabilities. Where we're likely going to get a reaction. Now, as you guys know, because you follow me, then I prefer volume analysis because I want to know where the bulk of the volume trades, which is why I'm keen on this value area high. Any range trader will know that the EQ is always a level to watch, and you've got value area high. You get acceptance into this value area, then you're basically trading within value. You get a rejection off value area high, and then you're trading this. Okay, reclaim above that, and then you continue trading this range. Okay, let's zoom in a little bit lower time frame now, and let's check out what's going on. So let's just hide this range for the time being, and we'll remove this. Now we can see we've got a sideways range. Now, what I'd be tempted to say here is, there's your range. Could we draw it a different way? That's a deviation to the high. It's possible. Yeah, so it's two ways you can draw the range, and again, this is the beauty of trading. It's, you know, it's you don't. There's no set rules. You know, we could say this is our overall range high, which works perfectly fine, or we could say that this is our range high, and then this was just a deviation. As it stands right now, I quite like it like this, and the simple fact of why I like it like this is because we've got a reaction at the EQ. We've got all this acting as resistance at the EQ. Break back above, come back down, back test the EQ, and then we've gone a little bit lower. So this is what I'll be looking at right now. So what can we do next? Well, we can throw in a volume profile within this. Find out where the bulk of the volume is. Quite simply, and it's pretty obvious, we've got a fair big gap here, so we can see it on the volume profile. So what I'll be looking at here is, if, for example, we come down, get a bounce on the point of control, back up, reclaim the EQ, then I believe it'd be a fairly short move, fairly short and sharp move, shall we say, put my teeth back in, up back to the value area high. Reaction off the value area high, and you've got a short trigger. No reaction, went too far. No reaction off the value area high, then I'll be looking ultimately to take out these highs and likely come back up into here. And again, I'll be looking for shorts, potentially take out these highs. Back in, short trigger, swing fairly pattern, continue trading the range. And the beauty of trading a range in a bear market is you just trade it until it breaks. One of these trades will go against you. Absolutely fine. You know, if price does end up coming back up here, deviates back in, you look for a short trigger, but then price just reverses, comes back up, reclaims and goes off. Yeah, it will go against you. But that's absolutely fine because you've just taken a loss there. It's fine because it's within your risk. You understand risk if you're trading like this. If you don't understand risk, then why are you trading in the first place? You know, if you understood this, then, you know, well, nice short entry. Take profit slightly front run the value area high. Deviation, once it got back in, come back down, you got a retest, you got a short trigger. Back down, point of control. EQ, point of control. Fairly straightforward. Okay? Eventually, yes, one will go against you, and that's absolutely fine. It's just the nature of trading. You've got to get used to taking losses. Obviously, that's to the upside. To the downside, well, first and foremost, obviously, we've got to pay attention to this point of control, because this is key right now. If you lose this point of control and start coming down, then ultimately, I'm looking for a stop hunt of these. So whether that ties in with a nice bounce, another test of the overall range lows and the value area low, or if that doesn't happen, then be looking to take out these lows, and then my eyes would be either a reclaim back here, so I wouldn't be looking to catch knives down here. I'd want to see some strength getting back into this range, reclaim this range, ideally with a back test, ideally with some strong volume, and then you'll be looking for a long trigger. If that doesn't happen, then the next point to note would be this low. Do we get a swing fairly pattern of this low? If so, then you've got a long trigger and you'd be trading it back up to here. And at this point, then you'd be watching price action at the time. Either A, do we get a reaction and bounce back off to potentially head down lower, or B, do a reclaim and continue up. In that case, you've taken some profits here on your initial long, taken some profits, you see that it's reclaimed back in, got the back test, you just add some profits back in. And then continue trading this range. And again, from this point, then you'd be targeting back up to the point of control. If price does come down here and you get NAFOL reaction on the way down and you get NAFOL bounces, and it just looks like it's rolling over, then, as we said before, you know, zooming out to the macro picture. Quite simple. Quite simple. So yeah, I'm not uber bullish, I'm not uber bearish. I mean, you know, after this much of a correction, it's daft to get uber bearish, but it's a level-to-level environment. And that's how we trade it. So, could the low be in? Like we said at the beginning, yes, it could be in. There are elite wave counts that do say that it could be in. But I've also got alternative counts that say that the low might not be in. Okay? So that's it. It's just level to level. And obviously, if price does end up breaking completely out of this range, taking out these highs and continuing, then ultimately back into this value area and right back into the point of control. Reaction there, trade it back down. No reaction there, continue trading to the value area high. Okay, simple, level to level. We use volume. If we use volume, we can see where the majority of the traders are, where the majority of the positions were taken. That's the beauty of volume analysis. Okay, so that's ETH. Next, let's take a look at Litecoin, because this has been getting a bit of attention on Twitter recently. Which is fun, because Litecoin is just as bad as XRP in my opinion, but anyway. It's sideways. So let's zoom it. In fact, no, let's start from the overall. Let's go log. So look at this, it's just going sideways. So first and foremost, let's just have a quick look. Overall volume analysis. Oh, would you look at that? It's just at one big sideways range. Magic. Point of control, decent reaction here, having a bounce up. Now, once again, like ETH, could we say that the low's in? Do we have an argument for it? Simple zigzag with the 786 target, it's possible. I'm not going to go through a low time frame count to try to figure this in, but you know, there is an argument there that it is in. Yeah, but the thing that I don't like about this is the fact that it never actually peaked the previous high, so it's never actually taken the previous highs. So for me, it's just range bound. Now, funnily enough, on this particular asset, this is when I created the range fib tool. So if you are inside the members group, you'll know that I created a range fib tool to help the traders out, because this is how it helps us to spot ranges and also deviations from ranges. And as we can see here, so the white lines represent the highs and the lows of the range. The blue represent the first standard deviation, and then the purple is the hour. Now what we can see about this is it marries up pretty much picture perfect. Obviously we do have a slight discrepancy between the EQ and the point of control. But obviously this is the macro point of control, but it's something to be aware of. So obviously if price does roll over here, gets back into the range, then ultimately I'll be looking to trade it back down to the EQ, the point of control. If we get another push up, so obviously we can see this, if we get another push up perhaps, then ultimately I'll be looking around this level here, which is roughly around, we'll call it $90 for easy numbers, which then lines up quite nicely as an SR flip over here. We can see here, you know, we've got respect at this level, and we can even see a little bit there. You know, we've got a lot of respect at this level. So obviously that's to the upside. If we do continue pushing up, then ultimately around the $90 mark, between 90 and 92. If we come down, as we said, then looking down here, if no reaction there, and it does lose this, then ultimately I'll be looking back down at the range lows. Now if it comes back down to the range lows, then as usual, what I'd ideally like to see is the liquidity from there, those stops being taken. So that could quite simply just be a simple straightforward swing failure pattern. And then you've got a long back up. If that doesn't happen, then ultimately this level to watch around 31, 32, and then worst case scenario, I'd be looking back down at this value area low. Now by worst case scenario, I don't mean it can't go lower, but we can see from history that this value area low has been well respected. Okay, we can see this, obviously this is back in the March 2020, December 18, called the lows after the bull run. And obviously the initial flip into support back in 2017, May 2017. So it's a key level, is this for me on the chart, very key level. Now I'm not saying that we're going to get there, but I'm saying if it gets down there, then that'll be something to watch. Okay. So for the time being, we are just range bound. You know, there's no reason to get overly excited, no reason to get overly bearish. You know, we're just range bound. And the beauty of Litecoin is, as I say, I created this tool for Litecoin in the first place. This is for the first altcoin that we tested it on, because Litecoin is a great range trading asset. It's awesome for trading ranges. It goes sideways. You know, it always goes sideways. To the upside, what happens to the upside? Okay, well let's come back out to that. To the upside, if price does manage to get out of here, then each one of these highs would be a target in the first place. Bear in mind, we're looking at the daily chart. In fact, let's zoom into the weekly chart to make it a little bit more obvious. Great time for TradingView to have a little stall. Let's see if it wakes back up again. I'll see if it's done. Apparently it doesn't like Litecoin on the daily. There we go. Woke up. So obviously if we do get out of here, then these levels will be interesting. But ultimately, if it can get the momentum and the squeeze, then value very high. But I would be very cautious about these. Very cautious about these. And I wouldn't say that if the price does get out of here, I'm just going to hold along up to here. I wouldn't say that. I'd monitor each one of these reactions individually. Because if it starts to roll over here and you're targeting up here and you've got a tight stop loss and it just rolls over, then you've just wasted some profits. You've just given it all back. And what's the point in the trade in the first place if you're going to do that? So monitor it on the way up. Obviously that's if it does start getting up. But for me, range bound, ultimately, keeping an eye on this. If we do get another drive up, looking at this level. If we don't get another drive up and we just start rolling over, back in the range, continue trading the range, sideways. Right, that'll do. That'll do. Obviously, if you guys want to learn how we trade and how I use volume, in my technical analysis, along with all the other tools like Elliott Wave Theory, etc., then first and foremost, come check out our website. On our website, access to our free Discord. If you click this button here, you'll go through to our free Discord, and there's loads of alpha shared in our free Discord. We've got over 1,000 members now, and there's charts posted daily, and obviously you can ask questions, learn from other traders, loads of different styles. We're not just fixated on one style within our group. And obviously if you guys want to take trading to the next level, then check out our Copilot section. And within our Copilot section, if you do join our members, then you can check out our technical analysis course. Now with this technical analysis course, there are over 70 hours now of education, everything from trading psychology, which we started last week. Module 1 is on there now. We've got all the cheat sheets, including journals, position size calculators. You know, we've got all my EXO templates, chat and chill, where I run through my high time frame and low time frame analysis on Bitcoin, including my own trading ideas. Elliott Wave Theory, you know, you can see just from the list that there's hours upon hours of content. So from absolute beginner through to advanced traders. So yeah, if you really want to make the best out of the next bull market, then you know it's a great place to start learning. And that's it. So thanks once again to Prime for sponsoring today's stream. And let us know down in the comments what altcoin you want covering next week. And if you liked today's video, don't forget to hit that like button and consider subscribing so you don't miss another video. Alright gang, as you were. Bye bye.